Good morning, traders and investors. Welcome to Thursday's edition of Benzinga's Pre-Market Prep. Spencer, what's on the docket for today? Nice range in the S&Ps overnight. We followed through on the week close, went down to 35 and a quarter, but so good retail earnings brings us right back up, trading up 4.5 points of 46 even. My levels to watch for today are the intraday high from yesterday at 47.75 and see if we could do some work at Tuesday and Wednesday's highs up in the middle 24.54 handle. Crude in the red by 22 cents here at 48.19. Silver and gold in the red as well. Gold in the red by 250 at 1292.20. Having trouble at 1300. And silver loses the $17 level, trading down a dime at 16.94. Well, let's bring in Dennis and see what's going on in the after hours and pre-market trading. Dennis, how you doing? I don't know. It's just followed through on the week close. And then you had some good retail earnings. Didn't see any really specific news to account for the decline and then the comeback.
PreMarket Prep. Hope we got the gremlins out this morning. We're trying something a little bit unusual. We're running the show remotely from Joel's computer, so we do apologize for that. But we are back. And Joel, I'm not sure where you guys left off, but I am actually still hearing myself pretty quietly in our broadcast. So we are going to work on this for you. So we're going to take another quick break and figure that out.
All right. Welcome back, everyone, to Benzinga's Pre-Market Prep. Sorry for the delay. Spencer Israel here with Joel Elconin and Dennis Dick. Let's jump right into it. So we talked about broad market yesterday. Which stocks do you guys want to cover first? Joel, are you with me?
Yes, I am. How you guys doing? We back good to go?
Yep.
All right, Dennis, where would you like to start?
All right, we're all back here. We're all listening to the feed. Sorry for the problems, guys. We've got it all figured out here now. The Gremlins are out, so Gremlins still kicking around this market, though. Last night, we got hit pretty hard on the S&P futures. They were down as much as 10 points last night, but we came all the way back here. Joel, what do you think of this after-hours trading action? The S&Ps, they knocked them down, and the buy the dippers come right back in.
Host of retail earnings, some good retail earnings. That's been your beaten down sector. You got some good reports out of Tiffany's, Abercrombie and Fitch, Burlington Coat Factory. I haven't seen Guess in the green, and Sears Holding. Yep, retail is hot.
We cited this 3 days ago. It turned when Kramer came with Macy's. Sentiment turned towards the sector. Every single retail stock is getting bought here. They're all coming in here and they're buying the dips on them all. I know you can say, okay, well, it's all reports, but it's all sentiment towards the reports. You know, the reports can be wishy-washy, some of them, and they're buying them anyways. They're all up. So if you just go across the board, PVH last night reported it's up significantly. Gas is trading up, GES, and we're going to get to the numbers on these too. We'll break them down. Gas is up 13%. Abercrombie and Fitch is up 16% on their numbers. Tiffany's is trading up 2.5% on their numbers. Burlington Coat Factory, which is BURL, is up 7%. Their numbers. Michael's store, MIK, can't bring that one up for whatever reason right now, my system, but it's up 10% this morning. I mean, every single retail stock. Signet Jewelers is trading up huge this morning. It's up 16%. This is a short squeeze from hell for anybody who's short the retail stocks on any of these. And I think you're going to see the entire sector, probably XRT, get a big pop here today.
All right, let's go into the individual reports.
Where should we go? Which one?
Tiffany's. Oh, Joel there? What are you doing, Joel?
All right, Tiffany. You want to go? Let's go Tiffany. So TIF did a report this morning. We got that number for you right here. Q2 EPS 92 cents versus an 86-cent estimate. Sales of $960 to $930 million. So beat on the top, a beat on the bottom. Q2 comps, however, we're down 2%. You see their fiscal year sales up in the low single-digit range. Fiscal year EPS up in the high single-digit range.
Good numbers, good numbers here. Stock's getting a $2 pop in the pre-market, $91 and change. Only problem is some overhead supply, but it's a lot higher. I think, the overhead supply comes in around 94 to 95. So we're still early here yet. It's kind of in the middle of nowhere for me here. This is one of the retailers, though, that hadn't been beat up as much. So I wouldn't expect as much of a rally here. You're not going to see as much of a short squeeze on a stock like this, as opposed to, these other ones that we're going to go into, like the Guesses and the Abercrombie and Fitches that were just annihilated over the course of the last 3 months. And those stocks are coming back hard this morning. Joel, give us a quick number here on TIF.
Pre-market high, very little volume at 91.40. So we'll keep an eye on that. And then just switching over to the daily charts. Let's see what the dailies can tell us here. Not a lot here. You did have that high just under $92, 91.57. That coincides with your pre-market high. And then really opens up until above 92, but opening into a little bit of resistance. The street leaning the wrong way into this report as we sold off. Let's see if our sellers emerge here to get back some of those profits that were lost over the last couple of weeks.
Let's jump into some of the major movers this morning. Go to Abercrombie and Fitch A&F. This was getting bid up last night. All the retailers were getting bid up last night. It might have just been people anticipating that, hey, these stocks, if they do anything okay, they're going to rally, and that's what we saw. Give us the numbers for A&F, Spencer.
Yep, A&F Q2 adjusted EPS of a 16-cent loss, 33-cent loss was the estimate. So bad, but it's better than what they're expecting. Sales of $779 versus $758 million. Q2 comps down 1%. Fiscal year comps.
Yeah, not great at all, these numbers. It doesn't matter. It's all sentiment towards these stocks here right now. And they're saying that's not that bad. And they're finding a reason to come in here and boom, stocks rallying 17%. Am I saying these things are all turning around and these are all the bombs? No, this is a relief rally for all of these stocks. It's a short squeeze for these stocks. A&F, if I'm looking at that one, that $12 that it came from was major support back in May, June, July. A real nice level. It got hit hard in July. Obviously went all the way down to 9. Now all of a sudden it's whips on back up 11.24. If it gets anywhere near 12, I think major resistance up there.
Gapping into a gap area. One of my favorite formations.
Joel sleeping. Did you fall asleep again, Joel? You there?
No,
Joel?
I'm here.
What's going on, Joel? You're just silent over there. What's going on? Come on. Let's go going.
11.55 is your pre-market high. Dennis, you mentioned the $12 level. We have a gap to fill up to 12.02. So that's an area still 75 cents away from that level, but 12.02 fills the gap from July.
Over here to the GES. It's trading up huge too, 13% this morning. It got a lift like yesterday off of the retail rally, and the retail rally continues here as well. Spencer, the details.
19 cents versus 10 cents on the EPS, for $574 versus $559 million on the sales. So a beat on both, and they see the Q3 estimates coming in lower, EPS lower than the estimate by a penny. Sales for the fiscal year or for the quarter will be up 4 to 6% is what they predict.
Big pop here as well. Again, it's hard to come in here and chase these things, but I'm not coming here and shorting them either for the same reason that sentiment has turned. But sentiment can turn hard again. And we've had now 3 days where, there's been a little bit of relief from these things, and obviously sentiment has turned, and they're jumping in and they're buying all these on the okay earnings reports. Again, another okay report here. Stock trading up at 14.15. That gets right near its August high before I had this 2-week sell-off. Joel, any thoughts on GES?
Let's take a look at Guest Stores here, another retailer getting a pop, 14.38. That is your pre-market high. Let's see if we have any daily levels that coincide with that. Man, Dennis, you picked out that 14.42 high. So I'll look at that as resistance for now, coming back on the downside. We've been holding $14 even since the report came out. So under 14, looks like we got some room on the downside.
Jumping over here to Dollar Tree, DLTR, another retailer that hasn't got a lot of love really for a while here now. And if we just go back to 2016, everybody loved these things. We had these huge runs in the summer of 2016 when the stock went from 75 up to almost $100, just got under 100 at 99.93. Funny how those big whole numbers come into play. And this has been leaking. And I know in the last month we've had a little rally here. Well, we're getting a lot of those losses from 2017, early 2017 back here this morning because the stock is trading up 8.5%. Assuming pretty good numbers here.
Well, yeah, 98 cents versus an 87-cent estimate. Sales of $5.28 versus $5.24 billion. Same store sales up 3.9%. And their fiscal year guidance is coming in higher than expected. And the EPS was also increased as well.
Wow. Wow. What a
wow here.
What a chart on this thing. All of a sudden, we're just back up here, up $6. You know how these things trade. It's going to be a wild session. 81.33 is your pre-market high. That takes you out, man. That takes you back to levels you haven't seen since April, and you had a bunch of highs right at the $82 level. I see a high at 82.05. So there's your potential target. Above that, it opens up to 83. But man, being straight up $6, you got to expect you might see a little, whipsaw action here. But big move for Dollar Tree.
Dollar General getting a sympathy move with it this morning. It's trading up $2.50 as well. We know these two stocks like to move together, so keep an eye on that one too. Going to last night here, we had a couple reports as well. I'm sticking with the retailers for now. PVH Corp, full disclosure, I do have a small short position on, but I've hedged it with some Ralph Lauren and VF Corp. So I'm long Ralph Lauren, long VF Corp against a little short position in PVH. That stock is taking off here after hours. Obviously took off last night. It's when I was shorting it. Down a little bit in here. It's up $6 though. Big pop PVH up 5%. Spencer, details.
$1.69 on the EPS, which was a 5-cent beat. Sales of 2.07 versus $2.04 billion. Fiscal year EPS coming in higher than the estimate. $7.54 was the estimate. $7.60 to $7.70 is what they're seeing for the fiscal year. And the EPS for the Q3, the current quarter, came in higher as well.
This nice pop here. It's trading right where it was trading. 126.11 is where it got to on August the 8th. This stock, if you look at all the retailers, this is one of the strongest ones. I mean, we are really only $10 off its all-time high. That is incredible when you think how much, all the retailers have been killed. I mean, this is, PVH. This is a Ralph. Isn't this like Tommy Hilfiger and what other brands are there? They own a whole bunch of brands.
I have no idea. I have no clue.
I'm pretty sure it's Tommy Hilfiger and there's a bunch of other brands.
Is it Calvin Klein as well?
I think there's a whole bunch there. I'm going to look. Give us some numbers, Joe. I'm going to look what brands PVH has.
This chart makes a little bit of sense, right? Because they actually make the stuff, right? So Amazon has to have the stuff. And I think that's something that Ryan Craver talked about when we had him on the show, the people that are actually making things. Exactly, right? So Amazon's
making them.
Exactly. Trading at the highs of the pre-market session right here, right now, 125.99. Don't know if you have a seller or anything in the book. In all honesty here, I don't see anything until you get up to some highs that you saw at the end of 14 and early 15 at 129 even. So is it going to rally another $3? Maybe, but there's really nothing in there that's saying that we're going to be stopping right here. Of course, if you took this home long and, maybe some lower price options, you might see some people trying to book some profits on the open, but trading right at the highs of the pre-market session as we speak.
Van Heusen, Tommy Hilfiger, Calvin Klein, Izod, Arrow, they licensed brands, Jeffrey Bean, BCBG, Chaps, Sean, Kenneth Cole. There's Michael Kors, they licensed brands for that too. There's a whole pile of stuff.
What are you doing there? Are you looking in your closet or something?
I know I got my Tommy Hilfiger, Calvin Klein clothes. That's what I'm wearing right now. I got my Tommy Hilfiger on. I used to be a Tommy Hilfiger fan. I don't even care though. I'm at the point where now I'm 41 years old. I don't even care what I wear. I wear just, whatever my wife puts in my closet, that's what I put on.
We know.
I don't do a hell of a lot of shopping in this house. Signet Jewelers, SIG, another retailer coming back here. Another retailer, same story. All the retailers that have been killed into these reports, they're getting bought hard into the reports. I don't even know if the numbers matter right now. There's just so much carnage if you were short any retailers 2 days ago because they have been straight up, all of them, and there was a big rally in them yesterday too. Like we were saying, it started with Macy's and it's just spilled in everything. And now they're coming in here. These companies that are reporting, even if the numbers are even not even good, they seem to be buying them. Signet Jewelers, I haven't looked at the report. Give us the numbers, Spencer, but this is up huge.
$1.33 versus $1.04 was the EPS.
That's a good number.
Sales, $1.4 billion versus $1.33 billion. Comps up 1.4%. If I would stop hiccuping, that'd be great. Guidance for the fiscal year was also raised. So they reaffirmed it. They reaffirmed their comps and their guidance.
This is all a huge pop here, but again, I'm not buying a retail that's up 16%. I mean, money was made if you took it long into the report. The easy money has been made here now. Can it continue to go on for a little bit? It can do anything, but you're at a big psychological whole number of $60. The easy money's been made, and that's where I'm sitting back here and just looking. And if obviously, if you see sellers, you see these things start to, give some back, it could be an interesting setup, but I don't know if that's going to happen. If these were reporting last week, that's what we were seeing. But the sentiment, again, I'm going to keep pounding that into your head like I was pounding into the show yesterday. Sentiment has turned on retail stocks, and that is why they're all getting bought hard this morning on okay reports.
Do you think the institutions have been listening to Benzinga's pre-market prep and listening?
We were pounding the table on the retailers yesterday. There was nothing 3-4 times that sentiment has turned for these things. And, now you see them all reporting okay, and everybody wants to get in. It's all about identifying when the turn happens. The turn happened yesterday morning, really. Actually, Wednesday night, or I'm going to lose my days. Tuesday night when Kramer came out and said Macy's was dirt cheap. It's funny, they're going to cite all kinds of different reasons. Kramer's not going to get any love for this. But I'll tell you something. Kramer turned that Macy's around, and Macy's turned a lot of other retailers around yesterday morning or 2 days ago. And that's continuing here, obviously, this morning. And now it's continued and spilled into every retail stock. So all it takes is somebody to come out, give a vote of confidence. What better vote of confidence you get from Jim Kramer? I mean, everybody watches. A lot of people watch him, and he is influential. And, did he cause a Signet Jeweler rally? It was going to rally on those numbers no matter what, SIG. But he helped turn the sentiment towards the sector, at least temporarily here, and get these dogs out of the dog, or all these retail dogs out of the doghouse.
All right, you hit a pre-market high of 62 even. You backed off to the $60 area, just holding in there. Maybe the pre-market high isn't in this one. This is going to be a wild session for SIG. You get a couple highs just under 62, and this is going back earlier in August. But above that, it opens up to 1684. Folks, just keep in mind, if you're really crazy, trying to look at this thing and, a screaming short, just remember this thing traded up to 150.93 in November of 2015. So I know it's up a lot. It's up 16%, 8.5 points, but I'll go a little bit longer term chart here. And you could tell, this thing's got a long ways to go. You're looking at that and you're like, hey, a breakout over 60. So be careful on this one. It's got a lot of room to make up on the upside.
CMG, Fuzzy saying it's 302 here this morning, getting a lift here. Stevens is upgrading the stock. He went under 300. Hey, I was right. So we obviously have been pounding this table short here forever. This trend has not been your friend. It dipped below 300 yesterday, hit our target there down to 296. Now it's back above it at 302.75. You could have a little bit of a relief rally here today. Stevens defending the stock, putting a $325 price target on it. There was also another note that crossed my tape last night. I forget who was defending it, but somebody else was defending it as well. So, there could be a little relief rally, maybe catch a few people shorting at 300 because people do that. And a lot of times a major stock will dip through a major level and then squeeze the shorts a little bit. So I wouldn't be surprised if CMG actually did have a little bit of a relief pop here today. Still long-term, still hating on it, still think long-term, or I still think this quarter they're going to lower guidance. I've been saying that for a month. And obviously, it didn't even really matter because I've been saying that since 360. It's down here under 300. even said anything. Sentiment towards the stock is still bad, but you saw it all turn in the retail stocks a couple days ago. Dogs are barking a little bit right now. CMG is a dog. That's why I don't think I'm coming in here fading this upgrade this morning.
It's lost $100 or 25% of its value in little over a month when it closed at 400.04 on July 13th. So if you get a little bit of a rebound, not surprising. I do have a number, though, that I like in CMG, and that's yesterday's high. And the reason I like yesterday's high is because it was a penny from the close on Tuesday. So there's a target on the upside, 305.50. Above that, it opens up to your 2-day high of 310. But I think all the people that bought it at even 300 are getting taking a deep breath here and see if that 296 even, that's your lowest level since January of 2013. So we'll see if that holds up for the intermediate low in CMG.
Black UK is asking, is it time to get back into Costco because the dogs are barking? It's been a dog for a while. I was at the Costco store yesterday, actually. It was busy. They're always busy, those stores. You know what? 160 is huge on this thing. So it's hard to get bullish this thing until you get a nice close over 160. It's butted its head up against there a couple of times, even yesterday. Get up to 159.44 a few days ago, 159.88, 159.95. It needs a close over 160. It's going to trade above 160, it looks like here this morning, but it needs to close above there for me to really say, hey, it's turned around in Costco. There's still concerns. It has rallied about $10 from the low, so it's already had a little bit of a rally here. I'm not sure I'm jumping in Costco 160.
Right here, trading at the high of the pre-market session. That's at 160.10. Not a lot of volume trading. Looking on the dailies, you can see here that 160 as well has been resistance since mid-July. But, man, if you could get some mo going to the upside, I don't see why this thing can't trade 162.50 today. 162.50, actually 162.35 was your high on August 3rd.
Jumping over here to there was just a lot of reports last night. HPQ, let's move away from the retailers for a little bit. Hewlett Packard, the legacy company, reported last night. And it's funny, it got the big pop on the initial numbers, trade up into over 19.5, right up to all those highs. And then they pulled the rug out from under it and it just collapsed. I think guidance maybe hit it. Spencer details HPQ.
HPQ Q3 adjusted EPS of 43 cents, that beat by a penny. Sales of 13.1 versus 12.3 billion dollars. They are, however, they're narrowing and raising their fiscal year outlook, the EPS and the sales.
It's a nice pop. It was a nice pop last night, up over 19.5, but just pulled the rug out from under it so quickly. Like if you weren't out there in the first minute or two, whoosh, and obviously down, and now we're trading down, and we've settled down here now. I'd look at those couple lows that you had maybe back 1836, 1840. I don't know. What are your thoughts here, Joel?
Man, you did get to print up to 1979. That was real quick.
Wow.
But if you were looking at your monthly highs, and 3 out of the last 4 monthly highs were exactly at 1958. So that's what you wanted to see there. You wanted to see it get back and hold above 1958. I'm keeping an eye on the close here, 1886. See if we can stay green for the session.
Let's jump over here to imbalances and look. They're hot off the press here right now, and the trends continue. Alibaba, 84,000 to buy every day. Like Alibaba has a buy imbalance in it, and the GE sell imbalances there again today too. 68,000 shares to sell. Square buy imbalances there too. Only 27,000 to buy in Square this morning, so it's a little smaller than normal. I am seeing some buy imbalances in some of the retailers here early. Obviously, they're going to be strong. I think that's going to be your sector here today. That's really going to get driven here. Nike's got 20,000 to buy. Foot Locker had a nice little rally yesterday. Nice little relief rally finally. I actually did buy Foot Locker on the open, and I shook out of it, and I should not have shooken out of it. I got out too soon, and it went straight up. So it opened. It actually had a little bit of a leak there, and then it just started rallying all day, and I wish I would have held on to it. The only one I did hold on to all day was Dillard's. That one was worked out well for me, but I bought a bunch of the retailers off the hop yesterday because I was preaching all show. It's like the retailers, and I made some money on most of them, but I just got out too soon. That's the scalper blood in me, and I can't seem to get that out.
No, nice rebound that you had been talking about over the last few days, and Another stock that's showing signs of life, Snap, SNAP. Yep, look at that thing. After all those down days, now you got all those up days here. Yep, yep.
Yeah.
And Snap here. Let's just look. You've had I believe you traded higher in 6 out of the last sessions, trading up another 16 cents above yesterday's high. Yesterday's high 15.13. So I was looking at the dailies on this one yesterday, and man, you got like 3 or 4 highs. So you got a couple at 15 and a quarter, but this thing really looks like it has 15.50 on the mind. July 14th high 15.59, July 17th high 15.43.
And SNAP does have a buy and balance again this morning, 59,000 shares to buy. It's early, and that's, obviously I could grow here as we continue, and the stock is trading up in the pre-market once again. And your Twitter worked out well too, Joel. We talked about this. Man, we've had some pretty good calls on the show here lately. We don't always pat ourselves on the back, but, I was saying yesterday on the show, and I bought the Twitter open as well. I wish I would have held on to the Twitter a little bit more. Again, the scalper blood in me. I got out too soon. I hope you held your Twitter better than I did, because it did hit our 17 price target that we gave on the show yesterday. What were your thoughts, or what did you do on your calls on Twitter?
Still holding on here. Yep. Got a little nervous yesterday, but I noticed the thing, it stayed green when the market was selling off. And I tell you, that's one thing when you look at your stocks and you trade them, you like to see them, stay green even in a weak tape. So I was able to lighten up a little bit because I did have some of the 16 weeklies. So I know if it's flat overnight or up a nickel, you lose money overnight. So just waiting to see, maybe get a close over 17. Really no major catalyst here. This is just primarily was a technical play, long consolidation, tight ranges, buyers put in a hard bottom here under 16. So we have traded higher 4 days in a row. We'll see what happened. I got the rest of it is in September. So I have a month to deliberate what to do with that. But kind of good, lucky, good timing on the technical side. Once it cleared all those highs at 1640, had some room on the upside.
Nice job there, Joel, holding on to that one. You're going to lose your Teva bet, though. Jag Trader bringing it up here.
Oh, thank you, Jag.
Catches a downgrade from Credit Suisse, underperform. I think they put a $13 price target on it. I mean, I've been saying this one's in trouble. This is Valiant VRX Part 2, in my opinion, and it's down here again this morning. I'm so glad I didn't get caught in this one, because I actually looked at this as a potential investment back when it was in the 30s, and I looked at all the debt, and I was like, ooh, way too much debt for me, and I did not buy it. So glad I didn't, because it was looking attractive as a valuation perspective up there. That was before they cut the dividend, and I was just thinking, how I like to buy stocks on weakness. But when I looked at all that debt, I was like, man, this could be another VRX. Obviously, I'm very happy I didn't buy it, because it's been halved since then. It's trading at 16.12 here. Our bet, I think, was right around. You were saying it's 16 versus 18. I thought it was like 16. 14.
It was. Why don't we?
I think I'm actually at the bet, but we always say it's got to be in the regular session. So let's see where it happens in the regular session. But I think I'm going to get a lunch on you.
All right. Well, regardless, you guys can figure that out later, because it's time for our first guest, our only guest of the day, Mark Chaiken, founder and CEO of Chaiken Analytics. So we'll be right back with Mark.
All right, I'm gonna be. It's funny when I don't have an echo now. No, I don't have it now, but when the show's on, I have it on. What do you think it is? We'll figure it out after.
Joel, you Zoom.
And welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line with Mark Chaiken. He's the founder and CEO of Chaiken Analytics. Mark, where are you at right now?
I'm in Sonoma County, California, right on the Russian River, drinking Pinot Noir and taking a good 1 week vacation, just about winding it down.
So, and yet, are you up now? Are you up to be with us, or are you up for the markets?
I'm with the market 100% here.
Okay, cool. So I want to ask you about this call you made. I guess it was Tuesday. You made a bearish call on Amazon. Tell us what you're seeing there.
Yeah, this was in our weekly market letter, which came out on Sunday. Amazon has been priced for perfection, and when they reported earnings on July 27th, the stock spiked up. But then it closed at the bottom of its range on the day and then gapped down the next day, and it's been down ever since. I basically see Amazon as having awoken a sleeping giant in Walmart. It's interesting because Jim Cramer picked up on the theme yesterday, and he did a 12-minute segment on it. I think you've got a situation where the retailers have to fight back. So you saw Macy's in their earnings report talk about booting up e-commerce. They hired a senior executive from eBay, but I think it's the Walmart connection that's really going to be the big pushback against Amazon. And interestingly, it's not just e-commerce, it's in the cloud, because Walmart is probably the toughest negotiator on price of any company in America. There have been manufacturing companies that have gone out of business trying to keep Walmart's business. And I think what's going to happen here is that Walmart's going to go to a lot of their customers and say, look, you've been doing your business in the Amazon cloud. I don't think that's really good for our relationship. Maybe you ought to switch over to Google or Microsoft. So I think what's happening with Amazon is that you've broken down technically. The stock has always been richly valued, and analysts are starting to lower their estimates. In a market that's on shaky footing, this is a prescription for selling pressure from the institutions.
You aren't concerned. So I guess a couple questions based off that. First of all, Amazon was the first person or the first company in the voice shopping space, whatever you want to call that, by a mile. They've been in that for at least a year now. That's one thing. And second thing, you think Walmart is just going to outprice Amazon?
Well, I think that Amazon is going to be faced with a lot of pushback in the e-commerce space. Now, I love Alexa, and we've actually ported Chaiken Analytics to Alexa. So you can go into Alexa and say, Alexa, what does Chaiken think of Amazon? And it'll say, well, it's got a bearish rating. But I think you're going to get a push. Yeah, I know. It's amazing. But I think what a lot of people are nervous about is Alexa is storing all our conversations, all our preferences. There's a little bit of Big Brother in there. 1984 has come 30 years late. And so not only are there privacy concerns, but bricks and mortar retail are not going to go away. Obviously, it's been a challenging time for companies like Nordstrom's and Macy's and now Walmart. But Walmart's a big player, big revenue. They're not just going to fold their tent and go away. So as I said, they're a tough negotiator. I just think Amazon was priced to perfect. You get analysts lowering their estimates and a breakdown technically, and you have broken down technically. I think that this stock is a short on any rallies. 990 was the breakdown level. We traded down almost 10 points yesterday. So I think that there are better places to be if you want to play the aggressive side of tech.
Okay, so then I guess bringing it back to the stock, technically speaking, looking at the chart of Amazon, give us your outlook for the next couple months.
Well, you're in this period of August, September where the market is typically soft. And I know everybody's saying, well, we know that, it's priced into the market. But in a soft market where institutions are going to be looking to raise funds, I think Amazon has the potential to break down into the mid 800s, which would put it down about 15 to 20% from its peak of about 1083 on the earnings spike.
Mark, I did watch that Kramer segment last night, and obviously he gave you a shout out as well. And I always enjoy your analysis and as well. Okay, so if Amazon, if you're you're getting bearish on Amazon, does that make you bullish on a lot of these other retailers? Because so many stocks have been Amazon. We've been calling it a verb basically. You look at Foot Locker, it got absolutely annihilated. It all started actually a little bit with the earnings, but all started when all of a sudden Nike was going to sell some shoes on Amazon. They knocked Foot Locker down 5%. We saw Costco get hit because they bought Whole Foods. There's been a lot of stocks that have been so-called Amazon here. If the Amazon, is fading a little bit here, does that make you bullish on some of these retailers that have really been hit hard?
I think it's really selective. You've got stocks that, like Best Buy, that really push back and have done very well here in the Amazon era. So Best Buy is our favorite in that space. That's a stock that's been making new highs. But even there, when Amazon announced that they were going to come out with their version of the Geek Squad, Best Buy took about a 12% hit. Those are the buying opportunities. Stocks like Macy's and Nordstrom's, I think you got to be a little bit leery. But you also have the apparel stocks, and that's really where I'd go. PVH has been a favorite of ours. It has a bullish rating. They came out with much better than expected earnings last night. Signet Jewelers, which has problems beyond Amazon in terms of aggressive accounting, better than expected earnings, up 16% pre-market here. So I think what you've got short positions because it's been an easy place to be short. But I think you have to be selective in terms of where you go to go against the Amazon tide. So I think the apparel stocks, particularly like PVH, Michael Kors, Coach, that have really responded well. The border tax is off the table when they get into tax reform. So that's one negative. But from the point of view of the retailers, you got to be extremely selective. Yes, Macy's hired a guy from eBay, but we saw what happened when J.C. Penney hired a guy from Apple. I think it was Ron Johnson, to turn it around about 4 years ago. That didn't work out very well. So Amazon is still a force to be reckoned with, but in 50 years on Wall Street, I've seen a lot of growth stocks come and go. And I'll tell you when they typically roll over. It's when they start doing things that are out of character, out of their sweet spot. So what's Amazon doing now? They're buying bricks and mortar. Well, their whole business was to disrupt bricks and mortar. So they buy Whole Foods. Sure, they can put pharmacies in there. They can leverage that distribution chain. But I've seen stocks that go far afield from their core competency. And when they break down technically, that's when I like to jump on them. If the stock hadn't broken down, I would have been neutral on Amazon.
Hey,
the
Mark,
breakdown technically is the key here.
Mark, question from our chat here. Is your analysis primarily fundamental, technical, or is it a little both?
It's a combination. So our Chaiken power gauge rating, that 20-factor model that we talk about on the show, has been negative on Amazon. When it broke down technically, then everything kicked in. So a stock like Amazon, which is a big institutional favorite, you don't just short because the technicals, because the fundamentals are overvalued. That overvalued can go on for a long time. But when you get that combination of technicals and fundamentals kicking in, you're really going to see the institutions view this as a source of funds. Think about it. Everybody who wanted to own Amazon at the institutional level already owns it. That's when stocks get vulnerable.
Mark Chaiken, he's the founder and CEO of Chaiken Analytics. Mark, before we let you go, what is on your radar for the coming week? Any particular news you're watching or catalysts you have your eye on?
Well, we're a bit negative on the market, and so we're doing two options webinars next week. We're doing a beginner webinar and an advanced webinar. We're going to show people how to use options in a correction to protect portfolios and make money on the upside. One of the great things about the options market is if you're making money on a put trade, you're a lot less prone to make a mistake and sell out a stock that you really like in your portfolio. So we're going to be focusing on options next Thursday, and I think that's the 31st. And we think that traders should be looking at the options market now as a way to protect themselves if we do get a September correction.
Yep, and I'll put the link for that webinar in the chat, so our listeners can see that. We've been on the line with Mark Chaiken. He's the founder and CEO of Chaiken Analytics. Mark, thank you so much for joining us today.
Thanks a lot, Spencer. We will never do this in a more beautiful location.
All right. Well, next time you'll have to invite us with you, so we're not stuck in an office here in Michigan, and you can get. I feel like that's only fair.
Deal.
Okay, fair enough. Have a good one, Mark.
Great week.
Have a good one, Mark. What is going on in the markets? What's going on in the markets, Joel? Anything?
We're doing okay here. We're just creeping higher. We're up 650 at 48.5. Flat UK is looking at the 2450 area and not seeing anything there. We are clearing the intraday high from yesterday, but I think a target on the upside here, if this bull momentum is going to carry, it's Tuesdays and Wednesdays high at 54 and a quarter, 54.75. Now, the 54.75, that was a straight print that you had on the open Tuesday, and then we came down. So that's my big area on the upside. 48.50, that's your pre-market high, and really not backing off that area.
You know what? I think this rally does have legs here. They came in buying that dip hard last night. That's telling me that there's investors out here who want to be in. The retail stocks are getting a lift, so obviously some of your stocks have underperformed, might show some life here today. But I'm seeing a lot of life coming from some of the tech stocks here too. And we don't know how long this is going to go for. But even look at like AMD. For instance, AMD has been hit really hard. It was up 15.65. It kind of put a double bottom in here the last few days, right around the $12 area. Then it bounces out of there hard yesterday, 12.48. You know how I like my 2-day move. I do think AMD has room up to 13. I'm actually talking against my book a little bit because I had an AMD short overnight, but getting the beats on that. But I have that hedged with other stuff too. So I actually like that chart, AMD, just from a short-term perspective. I'm just trying to go through a bunch of other ones here too. The only sector that could show a little bit of weakness here this morning, which I'm somewhat concerned about, is the food stocks, because we had a report here from JM Smucker, and if we bring it up, SJM, it's down 6.5% here this morning. Give us the details there for Smucker, Spencer.
This is one of those tickers that I can never get it right. I know it's got the letters S, J, and M.
It's kind of got them backwards.
I know the letters. I can never get the order straight.
The letters are just all thrown in there, but they're all random.
I never get the order straight. Anyway, Q1 adjusted EPS. Oh, let me pull it up there for a second. Q1 adjusted EPS for SJM. I had my little pro move on me. There we go. $1.51 is the EPS. $1.62 is the estimate. Sales of 1.75 versus $1.81 billion. So a miss on the sales, a miss on the EPS, but they're also cutting their outlook for the fiscal year. EPS was cut from $7.85 to $8.05. That was the original range. Now it's $7.75 to $7.95. So they cut it by 10 cents on end of the EPS range for the fiscal year.
It's not good news here. Joel, you got some levels for us here?
Yeah, the level, be short at yesterday's close of 118.85. We are several dollars.
I bought yesterday's close at 118.85.
You're kidding me.
No, I did. And I was looking at the after hours action. I didn't buy a lot. I just had a couple hundred shares. I was able to wiggle out of it last night. I'm like the only person that actually wiggled out of it because somebody was trying to sell it. I was like, somebody knows something here. I want the hell out of this. And I actually was able to wiggle out of some, or actually my whole position there, just around 118. So
wow.
That after hours action telling me, I was like, I don't know why this is like some people are offering it here, but it's telling me somebody might know something. And I was actually able to wiggle out of it. That was lucky.
Wow, what a great trade, Dennis, even though it was a loser.
Losing trade, the last 85 cents. Or actually, I got out of some odd lots there. I wiggled out a little bit at like right around scratch there. And then the last one was, I think, 118. You can actually look at the tape if you want last night. You can see my trades. So, because there was only like 400 or 500 shares of trade after hours last night in the 118 handle. And I got out of my couple hundred shares.
Wow. 109.50. That is your pre-market low. And we are $2 above it with a nice green candle after making the low. So your low could be in for the day. I'd keep that as a target. We haven't been anywhere under 110 here since, let's see, going back to October of 2015. So I don't know, we're down quite a bit, $2 off the pre-market low. I wouldn't be surprised maybe if buyers step up at 110 ahead of that low. 109.50, as I said, that's your pre-market low. And your first print really after the report was just above 114. So not much until you get up to 114. And Dennis, there's really nothing you can really you could hedge your Smuckers with, right? You just kind of got jammed on that trade.
Well, I didn't get jammed. I got out. So I didn't get jammed. I got lucky to get out. That's just reading the tape, and a lot of times action after hours can dictate, where it's going to move. You don't know if anybody knows anything or not.
Right.
But there is sometimes, some, shady stuff that goes on out there. And if you see a lot of buying, how many times do you see, a stock, it's going to report the next morning and then it's getting bid up hard after hours. And you look at it and then boom, they beat. And you're like, did somebody actually have that report? And then they got it after 4 o'clock. Like, I often wonder if some of the companies are loose after the market closes. Like, do you think they're looser? Like, because they know, the market's closed at 4 o'clock, so nobody, so now we can start, and then, the savvy guys go out there after hours. Because why so many times do you see a stock get bid up after hours and then, the stock actually beats? So why would they not just be buying it on the close? And I don't know if anybody has any information or if they just got an inkling or something now. But last night was a good example. I mean, Burlington was getting bid up and it beats. You had, SJM Smucker getting offered down and it misses. Abercrombie and Fitch was getting bid up hard last night after hours in the 10 handle. And, that's up for, 3, 4, 5% people are paying up after hours before the report. And then all of a sudden it comes out and beats. You just wonder, if people, have the reports. And I don't know how tight they are at the companies or not. Maybe they aren't as tight as they should be. Because why are they always right?
I don't know. Remember that one time the CXX guy was in there and you kind of tried to get in front of that, but quickly changed your mind. No, I mean, when they're throwing size around like that, it's hard to ignore. I see another retailer trading up 336 and Williams Sonoma. They must have had a good report.
Oh,
Spencer?
Threw me under the bus there. Give me a second to pull Williams Sonoma.
Come on, Spencer.
Oh, I'm sorry. Okay, well, Williams Sonoma.
You're always
okay.
ready.
I got it. They got Q2 EPS 61 cents. That's a 2-cent beat. Sales of 1.2 billion at 1.202 versus 1.2 billion. So pretty much a meet. They met the estimate expectations for its sales number. And again, they beat the EPS by 2 cents. As far as Q3 guidance goes, coming in line with the estimate is the EPS. Sales coming in line as well. Comps for the current quarter are going to be up 2 to 5% is what they say.
And stock is trading up 7% here in the pre-market as well. I mean, this is just the story. If you're a retail stock, you are having a rally here today. If you report earnings, you are really rallying here today. This is going to be Retail Thursday, I think. And Black UK is saying he's got the XRT here overnight. He's pretty happy about that. I think that's one of the best things he could have had here overnight, Black UK, because it's already trading up 1% in the pre-market. I think it could go higher here as well, because I think this retail rally in these individual earning stocks is going to spill into the others too. I would not be surprised if the XRT could at least get up to that little double top that it put at 39.25 and 39.26, which is up another 20 cents from here. But I think it could even go higher than that. So I think you're going to see a lot of money flying into retail stocks today.
Man, you make me want to just go out and buy something, Dennis, with all this retail talk here.
It's too late now. I mean, they're all bid up. Like, look, I just go through. Macy's is trading up 1.5%. Kohl's is trading up 1.2%. They didn't even report anything. They're just going up because every other retail stocks, even Walmart's trading up here in the pre-market. Now, Walmart's a different animal because it's already been strong. What was really rallying here this morning is the laggards, the stocks that have been under pressure, the stocks that probably have high short interest on them as well. Think about something like GPS. It had the good report, it popped, and then it dropped and came all the way back just because it reported on the wrong damn day. And, they were all hating on retailers back then when it reported last week. Now, GPS is getting a lift here. It's up 23.60 this morning. It's up another 1.16% here. Closed at, actually it's up more than that because it's going to be, the last was 23.46. It's bid 23.60 right now. So you're looking at a 2% pop here in GPS. So these are the stocks that they're coming into this morning, the stocks that have underperformed the retailers, and those are the ones that are getting the love.
Let's just go back to the Williams-Sonoma here. Street leaning the wrong way into this one, made a new low of the move yesterday here at 42.68. No one wanted to be long this thing into earnings. Now you get the earnings pop, pre-market high, 47.44. Looking at the daily charts, not a lot to lean on until you get closer to the $48 level. I'll give you a potential target on the upside here of 47.97. That was your high on August 8th. So getting a nice bounce here. And then I think Ace just said something about Cigna. Is that thing still going?
Still flying here. It's up 20% now, SIG. Man, how many retail stocks are up 15 or 20% here today? That is a combination of an okay report and a hell of a lot of shorts getting squeezed here this morning. This thing was straight down into the report. Man, if you know anybody was shorting this thing at the close yesterday, they are just getting annihilated here this morning. 62.5 now, 62.79. Some of the conference calls are going on here this morning too, so you want to be careful as well with what is being said on some of these. Like a lot of times you have these stocks report at night. Sometimes the conference calls are at night. Sometimes they're the next morning. I believe the Tiffany call was this morning as well. Signet popping around here. I'm assuming probably conference calls going on because it's really bouncing around here right now. Only thing is, think about all those levels you had up there, $62.85, $63. It's trading right up there near that resistance now. The easy money on the long side's been made here, in my opinion.
It just hit a real interesting area. I just hit 64.17 print there. And I'll just alert anybody that's trading this from the long to short side. There were 3 consecutive highs in the 64 handle, 64.39, 64.29, and 64.08. And this was at the beginning of July. You hit that very quickly and then you pulled back. So, and I was saying on this one that, I was looking at the weekly or the monthly chart and I was saying, man, this thing printed 152.57 back in late in 2015. So, different perspectives, different time frames can you get different ideas in a stock here. So 859 here. Spencer, we did it. You helped me out. Pretty good show today. Why don't you wrap things up and let us know if we're having a 9 o'clock segment or what's next on the docket?
On the docket is nothing for right now, but we got tomorrow's show. Someone who has not been on in a while used to come almost frequently. The Reverend Emmanuel Lemelson. He's the founder and president of the Lantern Foundation, also the CIO of Lemelson Capital Management. He'll be on the show tomorrow. We know he's got some really interesting positions on shorts and longs. So we're going to talk to the Reverend about his positions. As for myself, I will be in Myrtle Beach, South Carolina. So you guys are on your own tomorrow. Have fun and try not to blow anything up while I'm gone. I'll be back on Monday. So I hope that there will still be a soundboard and a setup and everything when I'm back. But that's for to worry about next week. But that is our show for the day. I hope you enjoyed our talks. Hope you enjoyed Mark Chaiken and everything else. As always, you can catch our show as it aired live on youtube.com/BenzingaTV or the podcast on iTunes, SoundCloud, and Stitcher. All right. Have a good day, everyone. Well, good luck out there. We'll be back with you on Friday.